All of these banks understand exactly what they're doing with inflation, and they understand exactly what gold is. But in order to kill that bird, along with all of the other birds relating to this new settlement status that the BIS is behind the most powerful bank in the world, it's setting the stage for a massive gold revaluation, which will not only allow you, as you've said many times, to survive, but also to potentially thrive. If I'm right, those few people who are holding gold will thrive. And when we talk about silver, look, let's not ignore silver. We'll talk more about it, but it is being wickedly accumulated by countries like India. I wouldn't forget about silver. It is not a tier one like gold, but it is also something that I believe should be characterized as strategic. And we're on the cusp of some very big things. And I think gold and silver and the dollar, those three things that we focus on, will have a profoundly different view. All three will, in the coming months ahead.
It's not a question of gold rising, it's a question of fiat currencies led by the dollar falling. This is really why the central banks in Asia, and particularly the People's Bank of China, have been selling dollars. What do they sell dollars for? Euro? No way. Yen? No way. Sterling? No. In other words, they're selling for real money, which has no counterparty risk, and they recognize that as gold.
Silver premiums have been dead on arrival for a while now. The markets, the physical markets, have calmed, and still, despite that, prices hover near all-time highs in gold and above 30 in silver. So imagine what happens to the price when physical demand comes back into the picture.
In today's weekly recap, three financial experts, Alasdair Macleod, Rafi Farber, and Andy Schectman, share their insights on the current macroeconomic news as gold and silver have had a decent trading week with significant gains. We watched hours of content to bring you the best clips of the week, so you don't have to watch tons of footage to get a good grasp of what has happened lately in the precious metals sector. Make sure you hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our recaps. Also, check our description for full credit details if you want to watch the whole interviews. Enjoy the episode.
Hope that Bill's right and that we see it start to move up again in its next leg. But this is one of those deals where, you know, if you haven't learned patience yet in this industry, you never will. And it teaches you to try and find optimism wherever you can. But indeed, I think, look, the global demand for silver is not stopping. It's just hard to see it and notice it here in the United States, where the public really has not participated as much as one would think in the rally. In fact, you could argue that it is as off the radar screen now as it's been in the last 3-4 years to the public. At the same time, the central banks like India are massively accumulating it. And the common theme with all of the accumulation we see by these central banks is repatriation. Now, I know more of that is applicable in gold, where India bought 1.5 times the amount of gold they did all of last year in the first 4 months, and brought it all home. At the same time, brought home 100 metric tons they've held at the Bank of England since 1991, I want to say. But I think the same thing is true with silver. It's just assumed. And when you look at all the silver that India has bought, you know, well over 600 million ounces in the last couple of years, and now the increase in the amount of silver, I wrote this down, that the amount of silver that they've been buying from the United Arab Emirates is up 654 times in the past year. That they bought $2.2 million worth between January and April of 2023. Yet over the same time period here in 2024, 1.44 billion, a 654-fold increase. So you're seeing a drive by these very large, sophisticated money centers in the central banks to accumulate commodities like silver, like gold, to repatriate them, to do it in ways that really aren't being reported too much in the Western media. And I think it's interesting. I look at it again as a very big contrarian indicator that the big sophisticated money is accumulating, and at the same time, the public here isn't. And again, we're seeing large deliveries off the Shanghai Gold Exchange and off the LBMA. and off the COMEX. So, I guess we'll have to see. But yeah, I think the trend of higher silver, just based upon the central bank interest in purchasing, one would think ultimately goes much higher, regardless of what short-term fundamentals look like, regardless of the pullback that we've seen. As far as I'm concerned, nothing's changed in a world that seems to be getting crazier by the day.
Now, Alasdair Macleod talks about the secret BRICS master plan and shares his view on why other countries are dumping dollars to accumulate more gold and silver.
And so this is why everybody thinks they're buying gold, but in fact, what they're doing is selling dollars. The conditions that are worrying the People's Bank and various other, particularly Asian central banks, is that they can see what's going on with these Western currencies, their fiat currencies. And the governments that issue them, or their central banks, but certainly the governments that are responsible for these currencies, are in debt traps. I mean, in the UK, we've just elected a left-wing socialist government, Labour Party, by a landslide. And they are committed to renationalizing the railways. They're committed to basically spending an awful lot of money, which they haven't got. They're assuming they can raise it from taxes. But already we see that, non-domiciles, in other words, these are the people who are going to be taxed from next year as if they, on their worldwide earnings, as if they were, actual residents and British nationals. If they live here, they're going to get taxed to hell and gone. So they're going away. Private equity are going away as well, because there's a special deal which allows private equity individuals in the private equity industry to pay a 20% tax as opposed to a 45% tax. That is pledged to be ended by the Labour Party, so they're going. So it's a question of the last one out, please turn off the lights. I mean, that's happening here. And we've got debt to GDP of around about 100%. It'll go rapidly up towards 110, 120%. France has just, by some abracadabra, managed to get a far left-wing socialist, communist socialist administration in control of the parliament. And that all in the name of keeping out Marine Le Pen and her right-wing party. And they're going to be spending like mad. I mean, the first thing they're talking about is reducing the retirement age, which Macron tried to raise, and there were riots all over the place. So we're going to see riots in France again and all the rest of it. I mean, the whole thing is just crazy. So that's the euro. So sterling, no, don't want to touch that. Euro, no, don't want to touch that. If you look at the yen, as I look at it at the moment, as we're talking, it's 161.35 to the dollar, almost a new low, matching last week's low point, and that is going to go lower. Why? Because while the Bank of Japan is talking about, looking at the interest rate situation and maybe raising them a little bit, I mean, they're not going to raise them really. If there is any change in monetary policy, they'll probably raise it by 0.25% or something like that.
In today's news recap, gold and silver's high price recession. So China didn't buy any gold for its central bank reserves for the second month running in June, writes Adrian Ash at Bullion Vault. Chinese consumers have meanwhile vanished from the country's jewelry stores, and Indian households have also quit buying. Silver-backed ETF investment funds have grown less than 5% in size from last month's four-year low, while gold ETFs ended June at their smallest mid-year size since 2019. After making out like bandits in 2021-22, retail gold investment dealers and mints are really struggling as high prices combine with high interest rates to crush Western demand for coins and small bars. The world's bullion markets this spring set new all-time gold price highs day after day and came within 1 cent of 2,450, while silver topped 3,250 for the first time since 2012, adding almost 45% in US dollar terms inside 11 weeks of silver trading. Yes, that surge has burnt itself out. But silver ended last week with its highest Friday finish in London since the 11-year high it set in late May, down only 2.2% from that Friday's weekend peak. Gold, meanwhile, recorded its 5th highest ever Friday for US and Euro investors. Even the British pound's clear relief at Labour winning a landslide UK election victory over the Conservatives still gave gold its 6th best weekend in history against sterling. Now we'll show you more clips of the latest interview, but first, smash the subscribe button, turn on notifications so you do not miss out our daily recaps.
It only changed. What did you began to saying that Russia's not trustworthy, America's not, China's not trustworthy? Is that the language you used?
So it looks like we have a little bit of a rally since around June 27th. I would be a little cautious of it, though we could get whipsawed here because it looks like open interest has gone too high, too fast in the gold market, which is reflected, of course, in the silver market. It doesn't necessarily mean that this rally won't be sustained, but it does mean to stay cautious here and not to buy fully emotionally into this rally since June 27th. We could see a few more drops from here in the short term. Silver keeps hitting new highs relative to platinum. And yes, platinum is also at all-time lows relative to gold. So both gold and silver are at record highs in platinum terms, which means if you've always wanted some platinum and you've always wanted it as part of your stacks, now is a good time to get a little bit.
But you could argue it's a very long fuse and it's been lit. How long before it hits the firecracker? Don't know. But it's not good for the dollar. It's not good at all for the dollar long term because you now have legitimate alternatives, if this grows, that have not been around for the better part of over 50 years. And again, no evidence to support this, but maybe they realize that the ability to rinse, wash, and repeat as they've done for so long is getting old and long in the tooth. And one of these days, they're going to put so much pressure on the managed money that they too capitulate, go short, sell their longs. And then when the commercial banks have all of those positions in hand, their long positions covered the majority of their shorts, they won't short the rising market. There will no be rinse, wash, and repeat, and it will run to the upside. One would think in an environment as crazy as this is globally, geopolitically, that it would be very dangerous to have these naked short positions the way that they do. And but yes, to your point, typically seeing a position where the commercial banks are that short is usually not a good sign for what silver's going to do in the near term.
What do you think of today's show? Do you agree with our 3 guests? Who do you think is actually right? Will gold and silver shine in Q4 2024 and have a blast year in 2025? Or on the contrary, will precious metals prices come back down after a very strong year? Post in the comments section down below your honest opinion. Share this video with someone who likes gold and silver. And check this episode right here because you'll love it. I see you on the other side.